And welcome everyone to another live stream and another episode of Daily Market Mastery with me, Christian Rauchenwald, on this sunny Wednesday. I hope you all had a great start into the new week. As always, during Daily Market Mastery, we're going to take a look at the stocks and other assets that I'm holding right now in my portfolio and where I think certain assets, stocks, indices, and so on are going to move in the future. Before we do that, however, as always, let's get the usual disclaimer out of the way first. Everything that I share in this live stream / video is my personal opinion and in no way financial professional advice of any kind. You should always do your own research, consult certified professionals, draw your own conclusions, and make your own decisions. And last but not least, all the tools that I'm using, so the charting software, broker, the strategy I'm following, and so on, is linked in the description down below. And the one thing I recommend you really check out is the Elliott Wave Principle, which you can read online for free if you use the link down below. That said, with that, we can hide the welcome message. Hi, Olga, great to have you here. How is your week going so far? And we can jump into the chart. I don't know how long we'll manage today. To be honest, I have a bunch of other things on my to-do list. I set up a new network server with Unraid and still have like a ton of tasks to complete there that I would like to finish today. But I'm still going to try to at least cover our usual suspects. Now, GameStop is already open here on the chart. Yesterday we mentioned, and the day before we mentioned, that this movement here surprised us a little bit because I actually really thought we have the bottom here. This will be the next impulsive wave upwards. Turns out that's not the case because we broke the level here at 22.31, as we can see here with this candle, which means we should at least get 5 more waves down. It's possible that this is already 1, 2, 3, 4, and 5, or 5 even till here. But now it's also possible that there is a little bit more room down before we continue the journey upwards, which kind of makes that line irrelevant as well. We're going to zoom out a little bit and try to make sure we have the right elements on the chart. One big unknown question that we are still that we still have to determine, or that we still simply don't know the answer to 100%, is if we have a 5-wave impulse up till here, or if that is just 1, 2, 3, 4, and 5 finishes here, because there are cases where wave 5 does not create a new high, and so it's possible that this is our wave 5 point, which means we can get rid of that for now, which means that right now the corrective pattern that we're waiting for to finish would be the movement down here, which also is going to be a pain in the ass to label because it could be A, B, and now we're in wave C. It could be that this is only somehow wave A, B, and now we're in wave C. So there's still a little bit of uncertainty here. And so we're just gonna have to wait this out because labeling corrective pattern is the hardest part in Elliott Wave Theory, in my opinion, or at least for me personally, it's the one thing that's the hardest. So perfectly labeling the corrective patterns. So I'm not even gonna do it, to be honest. So if somebody else out there has a bunch or enough experience in Elliott Wave Theory and wants to give it a try, be my guest. Let me know how you would label it. But again, the big first question would be, is that the first full impulse, or does it finish here? And then depending on that, because if it finishes here, then we would expect A, B, C, and I mean, not that far down, but still probably the $15 mark might be possible then to assume. So if we take an expansion here, so if that would be the end of the first wave, then here we have wave A, wave B, and then wave C gets a target at around $14.90, at which point I would consider GameStop hugely undervalued in my opinion, but we'll see if we go there. Our shares in theory, considering all the premium we earn from selling or writing options, would still be in profit at that price, but not by that much. And the other option is said that we are having our impulse till here, in which case we need a corrective pattern here, which could finish anywhere between 20.68 and 14.99. So it's like not too easy right now to label that properly, or at least confidently, let's say it like this. So if this would be wave 1, it's also possible that this is already wave 2, and then we would here be in the next wave 1, 2. I'm going to remove that one for now, which means we would, as said, expect this to be in some form A, B, C, But yeah, so the big question in short is, what are we correcting right now? Are we correcting only this movement here, and which means we are limited by our downside here, or are we correcting this big movement, or are we correcting the movement till here? And depending on that, we'll get a different answer as to what's the likely turnaround level. The fact that we broke through the, what was it, 22.31 or so, so what we had, I think it was here, so 23.33, 22.31, yeah. So the fact that we broke the 22.31 that we had as low here and we broke it here, in my opinion, points towards that we at least should touch the 20.68. And if we consider that this is our possible correction, I also consider the $15 mark not unlikely. It will suck temporarily while I'm holding the shares, but I think long term it doesn't make a huge difference and we should get another push up. Yeah, now with that, today for a change, it looks like our portfolio starts in a green day. Our call options that expire on Friday will are already like, what is that, like 80%? Or have reached around 80% of the maximum profit. We're just going to hold them till Friday because at the current price, we anyway wouldn't earn much premium. If the price stays the way it is, it's going to be a frustrating next week because, as you can see, even the $30 call options only offer around $22, $21 premium right now. So we'd look at it like $100 in premium right now. If the price falls, then that will also get cheaper, which means worst case, we only will get around let's say $50 for our 5 call options that we can write, which equals around 0.5%, which still is not a bad return, but obviously it's nothing compared to the premiums we earned just a couple of weeks ago. The implied volatility keeps falling because the stock is not moving drastically, and the price keeps falling slightly, which just makes it harder to, or less profitable to write those options. Yeah, but overall, I think not much changed with GameStop. We'll just have to sit this one out or wait for it to go through. Now let's do the usual thing and check for the stock yield enhancement program performance from yesterday and the day before. Remember, today is end of the month. If some entity needs to close their position for today, yeah, true, that might also cause some movement, but I don't know. I mean, I don't think it will cause like a lot of movement, to be honest. I mean, it's hard to say with GameStop, yeah, because you have like long, slow movements, either slightly down, slightly up, and then here and there you have somebody that has to do something that they didn't want to do. So like closing positions or hedging for options and so on. And yeah, so I guess we'll just have to wait to see. But I'm in no hurry here, so either way, I'm fine with the shares. I'm fine if they get called away, so the ones in this account. And so we'll just have to wait and see. So now, oh yeah, and it's end of the month, which also means I actually have more work to do than I thought, because I still have to do then our affiliate payouts and a few other things. So there we have the activity report. That's from 29th, so 2 days ago. Stock yield enhancement program. Where are you? There you. Yep. And we had Green Wave, Cost, and SunPower lent out, and roughly 3/4 of our Green Wave shares, almost all of our Cost shares, and how much do we have in SunPower? 200, yeah. So yeah, like, yeah, doing math in my head today, definitely not mathing properly. And yeah, we'll reply to that in a second. So yeah, so that's Green Wave, Cost, SunPower that was lent out. For Green Wave and Cost, the net P was 50 or 58%, which means whoever borrowed those shares actually agreed to pay 100 and 116% in yearly interest. For SunPower, it was 18% net P rate, so 36% interest rate, which I still consider steep. And now yesterday, what changed there? Faraday shares got lent out. There we have 200 shares, so they were not lent out before, which is interesting, although the interest rate is quite low. Now we see for SunPower, the interest rate stayed roughly the same, increased by 4%, so 2% net P rate, 4% overall. Cost was above 50, or no, it's pretty much the same, so less than, so 49.91 and 50.14, so pretty much unchanged. And Green Wave was at 58 and is now at 59, so also roughly unchanged. So other than that, now Faraday Future shares also being borrowed at a relatively low interest rate. Not much changed here, yeah. Which is also, like if we consider, so circling back, so to the end of the month, somebody might have to close their position. Yeah, it covers the camera up. So considering the shares that are available, I mean, I'm not saying that GameStop is not shorted, but if we consider that at Interactive Broker there for days now, there have been millions of shares available with a very, very low rate. It doesn't seem like there is like a huge issue in getting shares. So even somebody that closes their position, can easily reborrow them. You even see in the stock yield enhancement program that that pretty much every day the shares get returned, and then new shares are borrowed. So I guess it also depends on how the value of the stock changes, if it makes sense to return the current shares and borrow again or so. But the fact that I only hold 500 GameStop shares in that account, yeah, it's not like it's like millions of shares or so. So, and since there are like millions of shares available and none of mine get borrowed, but it doesn't seem like there is a lack of shares available to borrow, yeah. To answer your question, does it really pay off to lend? I mean, how much in total US dollars from lending? It's probably not that much. I mean, you can do the math. So for example, cost trades around, what was it? Cost around $9. Let's say $10. And let's round up here and say 100 shares were borrowed. So that means $1,000 of my money. So rounded up twice here, yeah, but let's say $1,000 of my money were borrowed at 50% interest rate yearly. So it would, if it stays like this, it would pay $500 in a year. So divided by 365, so it's $1 something for a day, which obviously is not a lot in terms of an absolute amount, but it all depends on how high the interest rate is and how long the shares get borrowed, and then obviously also what are they worth right now. So I mean, here the collateral amount is 780. So apparently it's calculated from the value at 10 or so, or it's rounded in some way. But my assumption here is the following. So first of all, even if I don't opt in for share lending, enough of other accounts will have been opted in. And we both agree that outside of lending shares, there are enough other ways of short selling or failing to deliver, and therefore, I don't see a huge benefit. Now, if I would hold millions of shares or so, or a bigger amount or so, and I anyway plan to hold them long term, then I would move them to the transfer agent. So like there I have my shortcuts of transfer agent. Where is it? Trading. So either computer share, Equinity, transfer online, or American Stock Transfer and Trust Company. Yeah. And no, I mean, there are two things. So when there are two aspects with the stock yield enhancement program, yeah. So the first thing is, and that's actually not really a risk, is your vote doesn't count. So if I borrow your shares from you, I'm the one that gets to vote. You don't get to vote for those shares, yeah. However, there's already the issue that there's anyway for every stock overvoting happening, and if you don't hold them at the transfer agent, your vote likely anyway doesn't count, because each broker basically just punches the numbers so that the submitted vote numbers actually match the share numbers, yeah. So and that's the one thing. So the voting is the first aspect, yeah. That basically your vote doesn't count, but it anyway wouldn't really count, because if you hold the shares in your broker, they are likely going to have more votes than they have actual shares, and so they will just throw some votes out anyway. Yeah? So that's the first And the second thing is dividends. So if you have the shares lent out, you do not receive the dividend, but the short seller actually has to pay you the dividend, which is, at least in the US, it's tax-wise, it makes a difference or could make a difference, because you then get a, I don't know how to pronounce it, it's dividend in lieu or in lieu or so. I think it's some French term or so. But that might make a tax difference for you. Yeah. But outside of that, they're still, in quotes, your shares. They're still in the database of your broker that you own them, and that's pretty much it. So like, I don't see any downside, and I don't see any risk of losing those shares. Yeah. So yeah, dividend in lieu. I don't know how to pronounce the word. Yeah. So, but. So those are the two downsides. So the dividends and the voting, yeah. And outside of that, especially if we talk about smaller numbers of shares, so if we talk about Green Wave, where my 300 shares have a collateral amount of $600 or so, yeah, it's not a huge amount. And if it's not like making my shares available will make any difference in the amount of shares available. So I mean, for GWAF, maybe there is a small number, yeah, considering the high interest rate. So you still see it's like 150,000 shares available, 75,000 shares available. So if what do we hold in GWAF total, 400 shares are available or not, it will not make a difference, because if I remove mine, then it's still gonna be pretty much 150,000 since those numbers around it. I don't think so, but it's a how to say that, it's a reasonable argument to look into. Yeah. So I mean, there would have to dig into the terms of the stock yield enhancement program. Yeah, but I don't see a reason why they wouldn't return them. That's the whole issue of the market, because even if they don't have them, they just borrow them somewhere else, or just fail to deliver in some other way or somewhere else to basically cross out this obligation and just have a new one somewhere else that might even be bigger. But that's definitely a valid argument. Yeah. Yeah, we'll check it later. So it's not that I don't believe you, but I will look into it. Yeah. But I don't see the risk there. Like, so again, if I would have a bigger account, or like so if it would be a bigger account, and it would be like for long-term investments or so, I would definitely see the downsides of not being able to vote, or my vote not being counted, or at least not being sure that my vote counts, which, if I'm really invested in a company, I obviously want to make sure that my vote counts. And I mean, the dividend aspect is not so much relevant to me. And yeah, so like for the few shares I'm holding, like I'm, especially in some of the positions that I have, like Faraday futures or so, where my entire investment for 200 shares was like $80. So even if they would go poof and gone, it's not like I couldn't survive that, or like it would cause many issues. Now, yeah. So I said I will look into that. Probably not today, but on the weekend. I'm actually going to write it down so I don't forget. Just a second. But then, to be fair, there would also be the question if, so like, well, terms and so on are always a good thing, but just because something's written in the terms doesn't mean that it holds up in a court of law. So there would also be the aspect of like who's actually on the hook. But yeah, for cost, I'm sure they won't return them. Yeah, I don't know. I mean, if you short a stock into the ground, Nvidia calls paid off. Congratulations. I didn't check yet how far Nvidia moved. Yeah, but if they short a stock into the ground or so, or maybe it goes up or so, like, I mean, so far, I don't think we've seen any case where shares, or I don't know any case where shares were not returned eventually. And the only way where it's possible that they couldn't be returned would be if the entire float gets transferred to the transfer agent. Because as long as that doesn't happen, it just works with basically just borrowing shares from somebody else. And for that, you just need to locate them, and you don't even need to actively borrow them. So I don't see the risk here unless any security would get 100% directly registered, because then any shares that still are owed cannot just be there is no locate possible, and you cannot just borrow them somewhere else, and you cannot buy them easily to actually give them back. But yeah, I will look into that. Yeah. Anyway, let's move on. So we see that the short interest hasn't changed that much, other than Faraday Future. Our few shares are starting to get lent out again. I think, however, so I said, so I like to draw a conclusion here. So personally, I believe that if the portfolio isn't too big, and again, it's not about long-term investments, but about just ideally making a profit. So not about like holding positions in companies you believe long-term in or so, then I think the upside is there in using the stock yield enhancement program. Even if, for example, cost shares wouldn't be returned and whatever, or so, that would then be like a unicorn, like something that happens once among I don't know how many things. And again, as long as it's not a major position in your portfolio, and it's not about like being long-term investments, I think it's added revenue, or added profit. I mean, it anyway has to be taxed and so on, but it still means that in the meantime, while the shares either move sideways, slightly down, slightly up, whatever, you earn additional money. And sure, 60% per year sounds very, very impressive. If you divide it down per day, it's not that much anymore that you get net, but it's still extra money on the table. Yeah. So I really think, like in general, there should be a different approach to like short-term stuff and long-term stuff. But yeah, since you brought up NVIDIA, let's start actually there. Did that move? Yeah, actually, wait, we have a 4-hour chart. And we actually went down yesterday. So I guess you got calls early today or yesterday evening. Went a little bit lower than expected, so that is gone. Yeah. So if we zoom out a little bit, I should have seen that actually. Yeah. So yeah, I looked at it yesterday during market open during the stream, and because basically here we have our correction down, and we have a wave A, B, C. So for basically A, B. And then we get a profit target. So those two here, or those three or four here, three here. So 120, 110, 95 for our wave C movement. And then I was looking at this here as 1, 2, 3, 4. And in this case, I'm going to delete that one for now just to make it easier readable. We get wave 5 targets here at 115 and 19. And since we have that overlap of those two target areas, 110 and 19, I assumed that maybe we finished here with the correction and we'll get our movement up. But I should have seen yesterday already if this here is wave 1 and wave 2. Well, I mean, it's hard. Shouldn't have seen, because we bounce here at the 1618, which would also serve as 1, 2, 3. But it's more likely then that this hasn't been wave 3 yet, but that we probably have some other kinds of 1, 2, 3, 4, 5. So wave 3 probably here, where we bounce on the 2, 3, 8, 2 extension level. Now it's actually, however, interesting because it's still possible. It's still possible. The third profit target for a wave C would be down there at the $95 mark. And so it's still possible that we haven't finished 5 waves down here yet, that this will be the next ABC pattern and we get another push down. On the other hand, if this is wave 1, 2, and yeah, let's check this real quick. So let's assume that's really our wave 3 and our wave 4 finishes here. Yeah, then we turn around on the first profit target for wave 5, so that would also work. So right now I consider both possible, that we have basically correction finished here. Although I got it wrong yesterday, I have to say I really thought we have the 5 waves down here, 1, 2, 3, 4, 5. But more likely 1, 2, 3, 4, 5. We'll take a look then. So question is, do we also have 5 waves already down here? So not sure if we'll be able to see it. Probably not, because we probably yes. Yeah. So no matter if the correction finishes here or if it finishes somewhere here, so definitely possible that we have some 1, 2, 3, 4, 5 here to finish that 5 wave pattern. And so I'd say right now it's more likely that we actually finish the correction and are going up from here. Yesterday, my, in quotes, not advice, because I mean, I only share my opinion. My opinion was that getting call options that expire late August, early September would be a good idea. So just in case this happens, that we first still have another push down before we make the journey up. Today I would say it's similar, but right now I would actually wait, because if we go above 116.63, then I'd be fairly confident that we have our 5 waves finished down here and are going further up. If we, however, don't break through here, then I see the possibility that we might still reach the 95 mark. There's also the third possibility that the overall pattern finished a 5 wave impulse, and that is actually 1, 2, and we're in the progress of making wave 3 downwards. But that's something more, yeah, like, I don't know, I don't consider it right now. So we'll see how it develops on the shorter scale before we adapt on the bigger one. But yeah, like right now I would wait for 116.63 to break through and then basically go long. Although my capital is all tied up in other positions, as it's been since last week or so, yeah. But yeah, kind of, it's always a little bit frustrating when you turn out to be wrong. I mean, to be fair, I mean, over the years, I've learned that there are obviously multiple things. There's, first of all, you have an opinion. Second of all is you kind of like voice that opinion. And I think the highest level is you voice it publicly in a recorded medium. Everybody will get it wrong from time to time. And to be fair, so far, I haven't been too wrong, because even yesterday I mentioned it's still possible that we'll get another push into the direction of 95. That's why I wouldn't buy shares, but buy call options, so that even though one could have then entered better, if they expire a little bit further out, it should still work out. Yeah. Yeah, we're gonna look then in a second at whatever ANW is. And before we do that, Barnes & Noble, what happened there? Nothing, we're still waiting. Yeah. So for a pattern to develop on a daily chart, it's going to take a little bit more for us to really be sure, or to really see a pattern. To be fair, with the naked eye, it doesn't look too good here, because with the naked eye, that would be 1, 2, 3, 4 in progress, and then 5 down, which means new low. But could also be that this is some form of corrective pattern, and from here we get the next impulse up. Again, my investment there isn't too big, so I'm just waiting and seeing what happens. CrowdStrike, how are they doing actually? Yeah, so 1, 2, 3, 4, 5. I think it should go a little bit further down than that. No, actually that would work. So if that is wave A, then we get a slight recovery, and then we get wave C down. Yeah, there we're still waiting as well. A, B, C. Yeah, I think Faraday future will also be interesting, because either we have here wave 1, wave A, B, C for wave 2, and this is the next 1, 2, and we'll get 1, 2, 3, 4, 5 up, or this is basically 5 waves A, B, C maybe, and then we get 5 waves down. But again, daily charts, it's going to take a while to develop. GameStop we already looked at. Green Wave, yeah, okay, now we lost a little bit in value here, so over the last couple of weeks. But considering how little shares are available to short and in relation how little the price dumped here the last month basically, yeah, I'm still willing to hold that and see how it plays out. So immersion, did we go up further? No. That was tricky like 2 or 3 days ago because we went very close on making a new high here, which brought up the option that we have a small 1, 2, 3, 4, 5 pattern in here, which still could be the case because again, wave 5 doesn't always have to make a new high. But now with those red candles, it's also possible that basically we topped here and are now going to get our ABC pattern downwards, which would expect, or where I would expect to at least reach the 1081 or 997 mark, so somewhere in that area, potentially even the 919 here, because that would be the end area of the wave 4 of the previous degree before we go up. But yeah, it's like that's the downside with Elliott Wave Theory. I mean, of course, if we work from a yearly chart and then really sub-label every wave and basically spend a month on it, then we might be able to have a more conclusive analysis in terms of, okay, it's most likely this. And if we just take quick looks at it, we always have to consider what's possible. So you have then pretty much the situation here, okay, it could be that this is the next 1, 2, 3, 4, 5 and we go up, or it could be that this is ABC and we go down. So we go up or we go down is obviously not really an analysis. But on the bigger picture, I still think that we're going up here. So on the bigger picture, we should be in a big wave 3, and on the smaller picture, that might be wave 1, 2, where we right now are in wave 3. That might have finished here, or might still get a push into the area of 1484 to 1730. And if it's already finished here, we'll get our ABC. That worst case, in my opinion, gets down to roughly the $10 mark, and then we'll get our next 5 waves up. So wait we shall and see what happens. Cost is still moving slightly sideways, I guess. Yeah, so not much change here. Auto labeling believes we will go down here. I think it's possible that we already have the correction finished here and that this is the next A1, 2, and now wave 3, then up. We'll see how it goes. I mostly think that's the case because visually this looks like 1, 2, 3, 4, 5 to me. So like a 5-wave pattern and not a 3-wave pattern. But either way, it's also possible that this turns into ABC. We go further down here. So worst case, $5 mark would be the 100% target here for a corrective pattern. And yeah, again, we'll just have to wait and see. Now we had NVIDIA, blah, 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 SunPower. We'll see if and how they recover further from their great announcement to stop delivery and installations of a bunch of products. Definitely not great development, but again, thankfully not a big investment. Here, pattern-wise, either this will turn into A, B, C, and we go down, or this is basically bottom 1, 2, 3, 4, 5. But we would need positive news for that as well. And then last but not least, SPY. That one actually moves the way we guessed, yeah, or not guessed, but estimated. So so the assumption is that this is wave A, B, C, similar to NVIDIA, where yesterday I also mentioned I would buy SPY calls, but a little bit longer dated because there might still be another push down. Turns out we had one. But potentially this is now wave 1, wave 2, and we should be looking at wave 3 movement upwards soonish, or worst case, hard to see here, but if this would be, I mean, I see A, B, C here in a 3-wave pattern. If this somehow subdivides into 5 waves, however, then this would become A, B, C, and then we get another push down. So yeah, but right now, so like as of yesterday, getting the slightly longer dated call options would have not been a bad play, but one has to keep an eye on it, like if we break certain levels here or not, to then decide to close them out or let them run. And then you asked for KNW. No Labs Inc. What do they do? What does No Labs do? Medical diagnostics. Okay. Now where are you now? There. Oh, also trading in cents. There you don't have a valid pattern. I mean, you might have from here. Not sure if that's a data fluke, so we can, yeah, like so. The issue here is this candle. Not sure if that candle actually happened this way. Because theoretically this would be, because that's the lowest point, this would be our starting point. And then we would need to have 5 waves here. A, B, and now wave C down would obviously go lower. So that would be if we pick this one. If we ignore that candle, we start from here. And we potentially have wave 1 and wave 2 potentially finished here. That's almost on the dot of the maximum target for wave C. So wave 1, A, B, C for wave 2. And then that should be the start of wave 3. Or the correction is not finished, and this is basically 5 waves, and now we get some other corrective pattern, but then it should move sideways and not really go below the 20 cents mark. I mean, not by much at least, yeah. So if we can ignore that candle, that's the big if here. So if it actually happened like this, or if that's some data fluke in the data source, then as said, we could consider counting from here and would have our wave 1, wave 2, and are potentially finished with wave 2 and would now be in wave 3 with potentially wave 1, 2, and then we would have to zoom in for that. So if we go to a weekly chart, there it also doesn't look too bad. So basically 1, 2, 3, 4, 5, A, B, C. So that would be the next thing where so we see that the third target here would be 27 cents. And yeah, that also almost overlaps with the 78.6 retracement level. So I would be, I don't know. So as long as we stay above 27 cents, I still assume that this might be really on a bigger scale as said. So on the monthly chart, wave 1, wave 2, and now we are getting wave 3. On the weekly chart, then just looking at that last part here, also checks out. That candle here is a little bit tricky because, I mean, 1, 2, and then 1, 2, 3, 4, 5 for wave 3, wave 4, wave 5, yeah. Do we have another option here? So no, I mean, yeah, no, I don't see another option here. So like that looks like 1, 2, 3, 4, 5. So as a 5-wave pattern, here we visually have a very long drawn out 3-wave pattern that again, those 3 waves might be finished, but the whole thing might turn into some combination, in which case we would get more corrective patterns. But then visually that looks like 5 waves up, 3 waves down, and we're still within the levels that I would expect for corrections to potentially reach. So yeah, like only below 27 cents, maybe a little lower even. So 25 cents. If we go below 25 cents, would be I know that's also still, what's that, 6% downside? No, like 10% would be, oh no, 10% are 3 cents. Yeah, so that's still a huge, oh God, my head is not mathing today at all. Yeah, so 25 divided by 32. So 22% downside, okay. So our 22% risk from here to 25 cents is where I would then probably get worried. But stop loss wise, I probably would just have it initially anyway at 20 cents. Yeah. They are the only ones with all, patents and working on the first to market non-invasive blood glucose monitor. I'm not sure I talked about it. No, you didn't. They have Sumitomo and Eli Lilly executives. Okay, FDA submit. But my brain's not braining either today. FDA submit for their device expected till end of September. Yeah, that can go both ways then. Yeah, so I mean, I think that's going to be similar to what was the other one, Mara or so. I don't have it on the charts anymore. Yeah, but not expansion. Yeah, I think so. Considering what you just shared, and I'm impressed by how much you have information stored in your brain and readily available. I wish I would have more time to analyze more stocks and so on and look into their fundamentals and what they're doing. But yeah, there's only so much time. Actually, we'll have to then finish the stream real quick because I have a call in a couple minutes set up. But yeah, so I just said like at 25 would be the point where I would assume, okay, maybe the pattern I see is wrong and will go down. I would put the stop loss at 20 cents and 20.7, so at the low here, because the moment we touch that or break that, the pattern is clearly downwards. So no point in not limiting the risk. And for the upside, if this is indeed wave 1 and wave 2, I would expect a third wave, although we're looking at a weekly chart now, so a bigger third wave would also take time to develop. But we would see like the first targets would already be at the $2 to $3 mark, and the common targets would be at the $10 to $14 mark. Yeah. Okay, you're into since 2021. Now, where does 2021 start? Okay, we're still higher. Oh yeah, yeah. I mean, yeah, it happens sometimes. If you believe in something, I mean, it's like with everything, with other things as usual. As long as you don't invest money you cannot afford to lose or that you would need in the near future, it's just a waiting game. And yes, sometimes you get it wrong, but I think those things would fit well together. You know, if they get that approval for the device, I mean, it obviously will not shoot up to $10 or $2 in a day or so, but that would then start a strong movement and basically be the start of the 1, 2, 3, 4, 5 that takes us then over the next, I don't know, 1.5 years or till end of next year, takes us at either to $3 or to $15. And I think risk reward is good. So yeah, like I don't have any capital free at the moment. Like literally everything is locked up. I have an astonishing €6 and $1 in cash right now. But once the call options this week here expire, or at least on Friday before the market closes, and I buy them back for $1 or so, I might just use the premium that I get for next week, even if it might just be $50, to throw them into this. Because again, I see the risk is limited and the upside is huge. So yeah, which brings me back to what you shared earlier, that you close options and don't hold them through expiry. Yeah. I thought about doing the same, and initially I also had like orders. Okay, if it's Monday and it already reaches 50% of the premium, then close them already, and so on. But that requires me to then be able to actually spend more time on figuring out what do I do next. So while it probably pays off bigger, or allows you to secure profit sometimes or so. Like if we circle back at GameStop, where I could have sold some option or closed out some options here on Thursday, and then on Friday it went down. Yeah. Yeah, it's like, if I would have more time and I could dedicate more time, or I would actively dedicate more time, I probably would. I have to take a note to buy JNW. So I probably would also then active the options more actively and close those out, take the $200. I mean, at the end of the day, it's for 2 more days, $50 extra. It's like, but yeah, it's just don't have the, or I don't want to make the time because other things just have a higher priority. And at the end of the day, then if I earn some premium every week, it's extra cash that I can use to buy shares either like this, or if it's a bigger pile, if it would be a bigger pile of cash, if the premiums would be higher again, then to write another cash secured put or so. So yeah, but I mean, you're definitely right. I think it makes sense. So I think it really makes sense to close out the options early and or buy them back. Yeah. So if on the first day you realize 50% of the profit that you thought you will make the entire week, why not buy them back and look for the next thing, the next trade you can make? But again, that would require being a little bit more active and having a little, or taking a closer look. Anyway, Hyra, I have to call it quits here for today. Thanks for stopping by. Thanks for all the input. Thanks for sharing KNW. It's really always a pleasure to have you around, and yeah, to get a lot of information. So I'm often learning more from you than you probably get information from me. Yeah, so I wish you a pleasant rest of the day. Tomorrow, as usual, and everyone else that lurked as well, tomorrow, as usual, there's going to be a stream again, 5 minutes roughly before market open. And let's see how things move. I know there were not a lot of very precise like predictions during today's stream. I'm really a little bit neben mir, like besides me today. Like, I don't know why. Maybe they didn't get enough sleep or so, yeah. And however, still, so I think NVIDIA, once it reaches whatever price level I mentioned earlier in the stream when we looked at it, definitely or highly likely a good long entry in my opinion. SPY, good long entry possible. Then KNW, interesting opportunity. I mean, reasonable risk and insane potential reward within yeah, like 1.5 years to reach like really the top. But if they get an FDA approval, it obviously in a day will already increase by a lot, or should, yeah. But anyway, I have to go. Thanks for stopping by. See you all then hopefully tomorrow. And yeah, have a great rest of the day. Till then.